Hello, this is David Scott Peters with therestaurantexpert.com, and I often get asked about financial statements, and one of those is a balance sheet. People ask, what should my balance sheet look like? I'm going to share that with you in about 2 seconds. What does a balance sheet look like? Well, do know a balance sheet is going to look different for every single business that's out there, restaurant or not, because it's based on stuff and who owns the stuff. Bottom line, stuff, who owns the stuff. And that's what a balance sheet is. It should balance. There are assets, things that you own, and there's people who own them, meaning it's hopefully you, but it could very well be your bank. You owe them money. So if you look at the example I've given here, we've got our current assets. Those are assets we're going to use in the next 12 months. Look at that, that's cash. I'm going to use that in the next 12 months. We look at fixed assets. Those are assets we're going to use over and over and over again over years. So that's our furniture, fixture, equipment. So we break it up into our current assets and our long-term assets. Now, as I scroll down, the opposite side is the liability side, right? Here's the stuff. Here's who owns the stuff. Well, in this case, we have our current liabilities. If our current assets are assets we're going to use in the next 12 months, what do you think your current liabilities are? Those are liabilities we're going to pay in the next 12 months. So you're going to notice we've got our taxes that we collect, our taxes for employment taxes and for sales tax, any notes that we own, and the notes payable, any of the loans would be this year's, the next 12 months payments. Whereas when I go down to long-term liabilities, those are liabilities we're going to owe over and over and again, if you will, a longer period than 12 months, past 12 months, that might be the other portion of your SBA loan. If you have an SBA loan, let's say we start it today, 12 months of it's in your current assets, 9 months of it's in your long-term liabilities. Then we come down to owner's equity, and that's when you actually are the owner. When you've paid off your bills and those assets, you've accumulated the wealth of it. And that's the bottom line. So there's stuff, and there's people who own that stuff. And I want you to think about this. All the balance sheet is a picture in time. Old timers like me, remember Polaroids, right? You used to go like this. Take a picture in time, and that's the health of your business, where it stands today. Just on a side note, you want to be looking up something called a current ratio, where you want to find out, based on your current assets and your current liabilities, how many dollars you have to handle it. That's going to be something that's powerful. This is David Scott Peters. Thanks for watching this video. Be sure and subscribe now to my YouTube channel. But before you go, download my free report. You'll find the link below in the description section. And be sure not to miss these other videos with expert tips to help you run your restaurant.